Joining us now to discuss BTC price and markets is Brett Sifling. He's a director of Get Invested at wealth manager Gerber Kawasaki. Welcome to the show, Brett. So, Bitcoin is continuing to follow stocks. We're seeing it down lower this Monday. What's your outlook?
Yeah, I think it's clear that all eyes are on this Fed meeting this week. Now that we got past the inflation report last week and the Ethereum merge, there's really a lack of positive catalysts. And so investors are really looking at this Fed meeting. They're expecting to do a 75 basis point hike, but another 1% isn't out of the question. And, it's already been a historical, rate cycle for them. And I think that investors are just a little spooked this week going into it.
So is that what is being priced into markets right now, this meeting happening this week?
Absolutely. When the Fed is raising rates, what they're really trying to do is curb growth and curb this inflation that's been the talk of the town. And whenever they're going to curb growth, speculative assets, especially in the digital asset market, they're going to slow down because liquidity is being sucked out of the system into safer investments, more conservative allocations just across the board.
Meanwhile, we're seeing the Ethereum merge happening last week successfully, and yet ETH is falling so much harder than Bitcoin. Why do you think that is?
Yeah, I think that people were excited that the merge happened. I think that it's a great thing for the Ethereum ecosystem. Obviously, reducing energy costs is reducing or increasing efficiency. But oftentimes, what we see when there's a major catalyst like that is that it's a sell the news event because new buyers that were buying in anticipation of the event have kind of dried up, and now with the macro tone that's happening, people are kind of selling off their positions as they didn't get the pop that they really hoped for.
All right, so as a wealth advisor, what are your clients doing and what are you advising them to do among these trends?
Well, I think that dollar cost averaging is going to be one of your best friends in a volatile market like this. Keeping your crypto allocation to what it needs to be, not dipping into emergency funds or other parts of your portfolio to make up for it is definitely key. But having a plan, talking to your advisor, having that dollar cost average strategy and a long-term mindset, especially in crypto, is going to be your best bet.
Yeah, I'm sure many of your clients are wondering, nevertheless, how low can Bitcoin go? So how deep will this recession get? How long will this crypto winter be? When do you see Bitcoin bottoming out?
It's really, really hard to tell, especially with an asset like Bitcoin, because you can't really measure it with a DCF model or any type of analysis. And so, there's obviously the support at the yearly lows that everyone's kind of watching right now. But until rates stabilize, until the Fed makes a pivot and has a more dovish tone, things in all markets across the board are going to continue to be volatile. And so you want to have that more conservative approach. You want to make sure that, over time that you have this long-term mindset, or else in the short term, it's going to be kind of a mess.
All right. So where do you see Bitcoin at the end of the year, Brett? Do you see any silver linings, or you see the downturn continuing its trend?
Well, this downtrend is still intact for now, but inflation is going to be facing much better comps towards the end of the year. So if we do see that trend continue to reverse and inflation continue to go lower, the Fed continuing to take a more dovish tone eventually, then I think that speculative money will come back into the markets, and obviously digital assets will be a huge benefactor of that.